Hello CA Foundation students, I hope your May 2026 exams preparation are going on in full swing. We have already uploaded Indian Regulatory Framework, the LLP Act and the Companies Act revision. All the videos in this series are going to be exam oriented videos which help you to revise one day before the exam in as minimum time as possible, and so you get confidence over all the topics. You cover as maximum as you can from the syllabus and then practice the questions and appear your exams confidently. So today's video is going to be about the Negotiable Instruments Act on demand of all the students. 2-3 students have commented about the topics of negotiable instrument, and so here we are with the exam oriented revision for Negotiable Instruments Act. Coming to the topic, does Negotiable Instruments Act specify what is the definition of negotiable instrument? No, that is not specified. But section 13, it says there are three kinds of negotiable instrument: promissory note, bills of exchange and check. So it is not that there are only these three kinds of instruments, negotiable instruments, but Negotiable Instruments Act is applicable only for these three kinds of instrument. Other promissory notes like the hundis or any other instrument, for those Negotiable Instrument Act is not applicable. So section 13 says there are three kinds of negotiable instrument: promissory note, bills of exchange and check. Coming to what are the characteristics of negotiable instrument. Before looking into each category and the characteristics, we must know that these instruments can be either demand instrument or time instrument. They can be either bearer instrument or order instrument. So it can be a combination, right? Demand instrument means the number of days after which the person is going to ask you for payment, that is not specified. Whenever he comes and hands over you the promissory note, say for example, or the bills of exchange, you will have to pay it. That is on demand. Time means say after 20 days, this is specified, or after 15 days, that becomes a time instrument. Bearer and order instrument. Bearer means the person to whom the payment will be made, that is uncertain, that is a bearer instrument. And order instrument means the person to whom the payment will be made, that is quite certain. This is what we know in layman language, right? But for bearer instrument and order instrument, we also have the definition. So let us look at the definition, because there can be a question of 2 marks, right, wherein they ask for bearer instrument and order instrument. So bearer instrument means where the name of the pay is either blank or name of the pay is specified with the words, say Mr. A or bearer, right? So name of the pay is specified with the words or bearer. Or it can be an instrument wherein the last endorsement is blank. What is endorsement? Transferring to some other person. And if I do not write the name of the other person to whom I am transferring it, that means the last endorsement is blank, right? So that is bearer instrument where the name of the pay is blank, or the name of the pay is specified with the words or bearer, or the last endorsement is blank, and the main important point is bearer instrument can be negotiated by mere delivery. Endorsement is not required. For order instrument, it is payable to a person, the person is specified, or payable to a person or his order, Mr. B or his order, or payable to order of a certain person, pay rupees so and so to Mr. B's order, or the last endorsement is in full, that is the name of the person is specified when the last endorsement was made. So it is negotiated by endorsement and delivery. That is the main difference between negotiable instrument of bearer type and order type. For bearer instrument, endorsement is not required, mere delivery and you can negotiate it. But for order instrument, for negotiating it properly, you have to endorse it, you have to write the name of the person, and then you have to deliver it, right? So that is bearer instrument and order instrument. Coming to characteristics of negotiable instrument. 8 to 9 characteristics you should remember for each category, and it is very common. It is a bonus question if it comes in exam, right? So what is a negotiable instrument, that we have seen, but what are the characteristics? It is always in writing. It should be signed. I am not going to go into detail for each of the point. Wherever it is necessary that you need some explanation so that you can frame your answer accordingly, there we will look into the details. Negotiable instrument characteristics: compulsorily it has to be in writing. Oral instrument is not a valid instrument. It should be signed. That is in case of a promissory note, signed by the maker. In case of bills of exchange, signed by the drawer. Another characteristic, it is freely transferable from one person to another infinite number of times. It is freely transferable from one person to another, and immediately you can remember this point. It can be transferred any number of time till its satisfaction. Holder's title becomes free from defect, and every negotiable instrument must contain either an unconditional promise or unconditional order, and that order must be to pay money only. The promise or order must consist of money only. Along with that, the money, the amount should be certain, the sum payable, even the time of the payment and the payee must be certain, and the instrument should be delivered. Mere drawing of the instrument does not create any liability. If I draw a check in your favor and keep it in my drawer, I have even signed it, but if I have not delivered it to you, that does not mean, if I have kept it in the drawer, that does not mean that I have to pay you, I am obliged to pay you, right? Delivery is important for liability to be created under the negotiable instrument. Coming to promissory note. Now the three instruments, promissory note, bills of exchange and check. First, what we are going to look at is the promissory note. It is an instrument in writing, again unconditional undertaking. So instead of promise, they have used the word undertaking, that is okay. And in case of bills of exchange, they will use the word, it is an unconditional order. So promissory note is an instrument in writing containing an unconditional undertaking which is signed by the maker to pay a certain sum of money only to certain person or to the order of certain person or to the bearer of the instrument. So according to the Negotiable Instrument Act, they say this last line that it can be payable to order also and it can be payable to bearer also, right? But further in the characteristics, when we look, we will realize that the negotiable instrument promissory note jo type hai, promissory note cannot be made payable to bearer because RBI Act does not allow it, right? So remember that. If you repeat after me whatever I am saying, the definitions and all, you will definitely be able to write in exams. But if you just watch, nothing can happen. So I request you, whatever you are watching, repeat it after me. कोई आपको देख नहीं रहा है, कोई देख भी रहा है तो किसी को पड़ी नहीं कि आप एग्जाम में क्या करने वाले हो. You should be concerned yourself. So repeat after me. Promissory note means an instrument in writing which is containing an unconditional undertaking signed by the maker to pay a certain sum of money only to a certain person or his order or bearer of the instrument. How many parties? Maker and payee. Promissory note के two parties होंगे, maker and payee. Say for example, I had an example for you here. I promise to pay to Sachin. I am writing, I promise to pay to Sachin or his order rupees 10,000 2 months after date. Right? So I have signed here, I have put up the stamp, I have signed here and I have mentioned the name of the payee. In this case, maker is Shrusti and payee is Sachin. What are the characteristics of promissory note? Always in writing, oral promise is not sufficient. Express promise to pay is important. Mere acknowledgement of debt is not a promissory note. And such questions can be asked for 2 marks or 3 marks or 5 marks. Different sub questions will be there and you will be tested here. So pay attention. Express promise to pay. Mere acknowledgement of debt is not a promissory note. Say for example, I say, I owe Mr. Sachin rupees 10,000. I am acknowledging the debt, but that is not a valid promissory note. If I write, I owe Mr. Sachin rupees 10,000 to be paid on demand for value received. Now this becomes something like a promissory note, right? So it is a valid promissory note because here I am promising to pay. I am writing to be paid on demand, right? But mere acknowledgement would not mean that it is a valid promissory note. So what are the characteristics in writing? Express promise to pay. The promise should be definite and unconditional promise. The promise must be to pay money only. Along with promise, we are trying to remember 2-3 points and then we will look into the examples as well. So express promise to pay, promise should be definite and unconditional, promise to pay money only, and the money, promise to pay money should be a certain sum of money, right? So example, I promise to pay rupees 500 to Mr. B 7 days after marriage with C. Now, if the marriage with C will happen or not, that is an uncertain event. That is why it is an invalid promissory note. But next example, I promise to pay Mr. C rupees 500 on D's death. Is death a certain event? Yes. So condition is there, but it is a certain condition. That is why it is a valid promissory note. I promise to pay Mr. C rupees 500 on D's death provided D leaves me with rupees 500. That is an uncertain thing because we are not sure if D will leave that amount, right? So it is a invalid promissory note because the condition is uncertain. So these examples are from your module. Remember them. It should be a definite and unconditional promise. Promise to pay money only and not in kind. If I say I promise to pay Mr. B rupees 500 and to deliver him a horse. horse, I am including something in kind, that becomes an invalid promissory note. It should always be signed by the maker. If it is not signed, it becomes invalid. Promise to pay a certain sum of money. Now there are two examples. I promise to pay Mr. B rupees 500 and all other sums which will become due to him. Here the amount is uncertain, right? It is an invalid promissory note. I promise to pay to Mr. B rupees 500 along with interest at the rate of so and so percentage. In this case, the amount can be calculated. So it is a certain sum of money. It is a valid promissory note. The payee and maker must be certain and different persons. So two persons, and those two persons have to be distinct persons. I cannot promise to pay myself and call it a promissory note. Along with that, they say that the promissory note cannot be a bearer instrument. If I write, I promise to pay rupees 500. I have not mentioned the name of the person. This becomes a bearer instrument, and bearer instrument as per RBI Act is not allowed, right? So it is a invalid promissory note. If I write, I promise to pay a sum of rupees 10,000 after 3 months, it is an invalid promissory note because it is a bearer instrument. An invalid promissory note, this is as per the RBI Act, right? Because in definition as per Negotiable Instrument Act, bearer instrument is allowed, but RBI Act says that the promissory note cannot be made payable to bearer, and it should be stamped. The promissory note should be stamped. The stamp must be cancelled by the initials or the signature of the maker. So what are the characteristics in writing? Unconditional promise to pay, promise to pay money only. The money must be certain. Payee and maker should be different persons. Express promise to pay signed by the maker, right? And it should be stamped. Coming to bills of exchange. Wherever there was the word promise, we will now replace it with the word order. It is an instrument again in writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money only to certain person, or the order of the certain person, or bearer of the instrument. So again, bills of exchange as per Negotiable Instrument Act, very similar definition to promissory note, and it says order bhi ho sakta hai, bearer bhi ho sakta hai. But when we come to the characteristics, here we will see that in this point, drawer, drawee and payee. Again, how many parties? There are 3 parties. Wahan pe 2 parties, payee, drawer and drawee. The one who is drawing the bill of exchange is the drawer. On whom it is drawn, that is drawee, and the person who is going to receive the payment is the payee, right? So in case of bill of exchange, the payee and drawer can be same person also. Why? Because I can say, I order Mr. C to pay rupees 10,000 to me. So, right? So payee bhi main hu, drawer bhi main hu, but at least 2 parties have to be distinct. What are the characteristics? Again, in writing, definite and unconditional order, express order to pay money only, which should be a certain sum, and the bill of exchange should be signed by the maker, it should be stamped, and the drawer, drawee and payee must be certain. All the 3 parties may not necessarily be the same, but at least 2 should be distinct. As per RBI Act, bill of exchange cannot be made payable bearer on demand. So there can be bearer on demand and there can be bearer time instrument as well. So I order Mr. C to pay rupees 10,000. Here it is a order instrument. Naam specified hai. I order dash. I order the bearer to pay rupees so and so. This becomes a bearer instrument, and if I say on demand, it becomes a bearer on demand instrument. That is not allowed. Let us look at the examples on page 7.8 and it will be clear. On demand, pay to the bearer the sum of rupees 500 for value received. Now you can see on demand, pay to the bearer. It is not a promissory note, it is an order. On demand, demand instrument to the bearer, bearer plus demand, it is an invalid bill of exchange. On demand, pay to A or order. On demand, demand instrument, pay to A or order, order instrument, sum of rupees so and so. It is a valid bill of exchange because it is not bearer plus demand, it is order plus demand, and that is allowed. But in case of negotiable instrument, bearer plus order is also not allowed, bearer plus demand is also not allowed, and bearer plus time is also not allowed. Here only the bearer plus demand is invalid, demand plus order is valid. right? So that are the essential characteristics. Again, all these points will be clear in difference between. What is the difference between promissory note and bill of exchange? First, what you are going to write is the definition, right? Very simple. Write the definition. We have already revised. Nature of instrument. Promise hai, order hai. Then parties, 2 parties, 3 parties, which maker, payee, drawer, drawee and payee. Acceptance. Promissory note के case में acceptance is not required because the person who is signing it is the person who is liable to pay, and in case of bills of exchange, acceptance is required. Payable to bearer. Promissory note cannot be made payable to bearer, but bills of exchange can be made payable to bearer, but it cannot be made payable to bearer on demand. Coming to check. Now it will be short and sweet because it is a category of bills of exchange, right? But the difference is it is always drawn on a banker. So drawer in case of a check can be any person, but drawee is always a specified banker. So check is a kind of bill of exchange drawn on a specified banker, and it is always payable on demand. That is the definition of check. Check is a kind of bill of exchange drawn on a specified banker, always payable on demand. So once I issue the check, within its validity of 90 days, anytime the payee can go to the bank and encash it, right? So that is why we are saying it is always payable on demand. 3 parties, drawer, drawee and payee. Drawee, always a bank. Now one concept in case of check is a drawee in case of need. What is drawee in case of need? In case I feel that the drawee would not be able to honor the payment, I feel that the amount in my account is insufficient, or the so the bank would not be able to sometimes make the payment maybe. So in that case, I will also mention drawee in case of need, who is to be resorted to if the drawee does not make the payment. The last party is the payee, and it can be drawer himself. If I want to withdraw the cash on check, I will write self. So it can be drawer himself or it can be third party. Characteristics of check, same like the bills of exchange, but there are certain differences, like check need not be stamped, but bill of exchange has to be stamped. Check is always drawn on a specified banker, drawee is always a banker, but bills of exchange can be drawn on any person. Bills of exchange is cannot be made payable bearer on demand, but check is always payable on demand. Bill of exchange can be demand instrument or a time instrument as well. So that is the difference और essential characteristics दोनों अपना यहाँ पे cover होता है. Now coming to the last topic of this video, inland instrument and foreign instrument. So inland instrument and foreign instrument. चलो अभी हम लोग खुद से revise करते हैं, ठीक है? Now why I am saying this is the last topic, because I want after this topic you do all the questions, you do revise this theory again on your own and do the questions, get the confidence, and then move to the other topics. The topics like inchoate instrument, ambiguous instrument, dishonor of check, section 138, presentment of instrument, then when is the presentment not required, then importance of delivery, and then the rules of compensation. All this we will cover in the next video, but we are ending this video on a very important topic, inland instrument and foreign instrument. The foreign instrument definition is very easy. Foreign instrument is the one which is not a inland instrument. And what is the inland instrument? 2 conditions. Always made or drawn in India, plus drawn on a person resident in India. Okay, resident in India. This condition will be satisfied. If not this, check if it is payable in India. Right? So that is the thing. 2 categories. Either it is drawn or made in India, right? Plus it is drawn on a person resident in India. If not this, check whether it is drawn in India and it is payable in India, then it becomes an inland instrument, right? So that is the simple thing. Foreign instrument is the one which is not an inland instrument. Inland instrument is made or drawn in India plus payable in India, or if not this, it is drawn or made in India plus it is drawn upon a person resident in India. And if you endorse this inland instrument by mere endorsement into a foreign country, inland instrument does not become a foreign instrument. You have to always check these conditions and then decide whether it is an inland instrument or a foreign instrument, right? So, and now why is this classification of inland and foreign instrument required? Because in case the instrument is dishonored, in case of a foreign instrument, how will the liability of the maker or the endorser be decided? So for that, we need to know these provisions as well. Inland instrument, foreign instrument, I hope it is clear. Now, if you categorize the instrument as foreign instrument, then the liability of the maker, if the check or any instrument is not honored, then how will the liability be decided? In case of foreign instrument, the liability of the maker depends on the law of the country where the instrument is drawn, and liability of the acceptor or endorser depends on the law of the country where the instrument was made payable. Clear? Let us look at an example and you will be able to solve the question if it comes in exam. Here, see all these examples, once look at it, we have cleared the concept, but once you look at these examples, it will be very easy for you in exam. Coming to, it will hardly take 5 to 10 minutes of yours to look at the example. Now this example, a bill of exchange is drawn by A in Berkeley. So drawer is Mr. A, it is drawn in Berkeley, it is drawn outside India. So first condition is itself not satisfied, it is drawn outside India, it becomes a foreign instrument. Rate of interest यहाँ पे कितना है 15%. Accepted by B. So acceptor is a outside person. Payable in Washington. Payable is also in outside India, where the rate of interest is 6%. Now this person, Mr. B, the bill is endorsed in India. He endorses the bill in India and it is dishonored. Now if it is dishonored, this person to whom it was endorsed, he can either file a case on B or he can file a case on A, right? An action on the bill is brought against B in India. He brought an action against B in India. Now whether India ka law will be applicable or Washington ka or Berkeley ka. So who is Mr. B? He is the acceptor or endorser of the bill, right? He is endorser in this case. In case of B and this person, B becomes the endorser. So liability of B will be depend on the place where the bill was made payable, that is Washington. So the rate of interest he will be liable to pay is only 6%. But if the charge is, A is charged as the drawer, if the charge is brought on A, now who is A? He is the drawer, and because it is a foreign bill, drawer's liability depends on the law of the country where the bill was drawn. So the interest at which he will be liable is 15% because Berkeley ka rate of interest is 15%. Clear? So that is the case of liability, that is the provision for liability in case of a foreign bill for drawer and endorser. I hope you have got a fair idea of all the concepts that we have discussed. Do watch the next video and check out all other videos. Share it with your friends too and subscribe this channel if you are finding these revision videos helpful. All the best.